Fourth, and this is something that Ray can speak to with more depth than I can, and that is, under the current law, the consumer advocate, the Office of Consumer Advocate in the insurance department, represents the public in rate filings. And the consumer advocate is not a powerful position. So both the Senate and the House are proposing to change to giving what's called the public counsel the power to subpoena, to open records, to recommend prosecutions for false filings, and instead of having the responsibility for representing the public be deep in the bureaucracy of the insurance department, to instead have the Office of Public Counsel represent the public. And the Office of Public Counsel actually is overseen by the legislature, by the Joint Legislative Audit Committee that Ray was chairman of when earlier in his legislative career. So we believe that's critical to create almost an adversarial situation when rate increases are being proposed that ought to be challenged. And then a proposal that I've made, and it goes back to something Ray said about looking back at policy decisions, Jim, and not getting stuck. I'm proposing retrospective rate review, so that all rates that have been raised, even if they were approved, would be subject to an automatic rate review within 24 months based on what actually happens. As Ray said, the best thing can happen to us is no more hurricanes or big hurricanes for 2 years. If that's the case, even rates that have been approved need to be reviewed in view of what's happened. This would put all rates raised in the last 2 years, when we've had these huge rate increases, under the microscope. If hurricane activity goes down, if hurricane damages go down, then hurricane insurance or property insurance rates ought to go down. The other thing is that, and Ray mentioned this, we want to require that policyholders be informed in advance, specifically with dollar amounts, of the discounts they'll receive from various hurricane proofing and armoring, so that you know if you put on storm shutters, this is the discount you're going to receive. And I want the Chief Financial Officer of the state, in her capacity, to review those discounts to make sure that there's truly a dollar-for-dollar drop-through or pass-through, so that the advantage goes to the policyholder and the advantage of the savings is not lost somewhere in the insurance company. I think that that's critically important. Then rates should be based not just on where you build, but on how you build. And the claims history that you've had ought to be taken into account in rate setting. You know, in healthcare, Daily News buys health insurance, right? And when you come back to have your health insurance plan renegotiated, the first thing that your insurance company slaps down on the table is your claims history. They say, Tom, you know, you've just had this terrible claims history. You've had all these people, they've abused it, they've gone to the doctor when they didn't need to, they went to the emergency room when they should have gone to the doctor, and that's why we've got to raise rates. That's why you've got to pay more. Well, the claims history of a policyholder who has property insurance also ought to be taken into account, and that gets to the rage that people feel for never having submitted a claim, for going out of pocket to fix their roof so they didn't have to submit a claim, and then getting their rates raised or getting their insurance canceled. So we want rates to be based not just on where you build, but also how you build, and then claims history taken into account. I learned something interesting in listening to the discussion about where claims are coming in for citizens. For example, $1 million homes built on the beach. That's the obvious target for everybody else. You know, for all my friends who live in Niceville with me, we want to talk about the $1 million homes on the beach. That's got to be the reason everybody's rates have gone up. The fact is that when you actually look at the citizens' payout, the ratio of premiums collected to claims paid for $1 million homes on the beach in the state of Florida in 2004 and 2005, There were $81 million in premiums collected by Citizens Insurance compared to $19.5 million in claims paid. So actually that was a profitable line. Now the reason is because in 2004 and in 2005, a lot of those $1 million homes on the beach, not all of them, but a lot of them, were built according to Code Plus standards. So it ought to count how you build, it ought to count what your claims history was, and it ought to count where you build. But where you build is not the only driver, and shouldn't be the only driver, in what people charge. And the other thing is, we want to require a periodic review of all the cost models that are used to calculate and create assumptions for what insurance costs ought to be. Those cost models ought to be the scientific models, the econometric models need to be reviewed on a regular basis. And then, as Ray pointed out, both the House and the Senate want to require that any insurer making a rate filing, any one, include a certification from the CEO of the company and the CFO of the company, and I don't care if they live in Delaware, that the filing is accurate, that it's consistent with accepted actuarial principles, and that all dollar savings achieved by policy changes are passed through to the policyholder. And we started out with some softer language, but I and others in the Senate Insurance Committee have pushed the chairman, and he's agreed to make sure that also the dollar for dollar savings that are caused by changes, whether it's armoring your home, whether it's changes in the CAT fund, whatever it is, that those drop through. But also we're going to make them sign an affirmation that it's done. We want the CFO of the state to audit to make sure that, that the dollar amounts are really passing through, and if they lie, we're going to prosecute them for perjury. Now that's fair regulation, because we're asking people to be honest and straightforward with their customers.
Can I just a couple things to that? On the discounts, called the mitigation program, basically, it's already been seen that people can call their insurance companies and at no charge have an inspector to come out and inspect their home. And so if there's a way that you can get that word out to your readers, that they can get their homes inspected through what's called a mitigation program, that we're seeing just the fact they get a home inspection with a 19% reduction in their premium because their home is actually more secure for hurricanes than may just be anticipated just by a quick look or just a renewing of their insurance over time. And so the House and Senate will actually put some money in what's called a mitigation program for people, for shelters and roofs and those kind of things. But that's a very innovative program that really is, we talk about long-term for people to prepare themselves for potential storms. And the Public Council, I just want to emphasize how important that is. The Public Council actually works with the Joint Legislative Auditing Committee. One of the more unusual arrangements, and it's forward thinking of the past legislature, that the Public Council works with the Joint Legislative Auditing Committee itself, so they're not bound by any bureaucracy or any secretary of an agency or whatnot. It's strictly that committee that can be an advocate to the insurance regulators, just as they are to the Public Service Commission for utility rates and phone rates. But the history of the Public Council, if you go back and review that, has been extremely effective in being a consumer advocate. And so I think we're right in actually having an advocate for the property owners when it comes to insurance rates, because the evidence is there that they do an excellent job of being an advocate for the consumer.
Go ahead, Jim.
As a property owner, a lot of what both of y'all have just said sounds good to me. I wonder, though, how good it sounds to the insurance companies.
Doesn't matter.
Well, it may matter. In our paper yesterday, we had an item from the president of the Florida Association of Insurance Agents.
Right.
And he said, more government mandates likely will be a tipping point for a greater exodus of insurance companies from Florida. How do you respond to that?
I don't believe them, first of all. Transparency is important, and I don't think businesses are in business to get out of business. I'm not convinced of that. There's some stability in the market that we can create. We've already talked about that at length. But insurance companies, I think that the insurance companies and the heads of them that I've had a chance to talk to realize that the state of Florida is stepping out on an uncomfortable limb that we all are stepping out on next week.